expense in excess of the arm's length amount determined, right? Now, uh, one important point which I would like to highlight and share with all of you is that, as per the recent amendments made to these Singapore guidelines, with effect from this year, that is 1st of January 2025, uh, an interest-free related party loan transaction will not be accepted to be at arm's length under any such circumstances, unless, and until the taxpayers have, reliable and very credible, solid evidence to support that uh, third parties will render, or provide an interest-free loan, which is, to be honest, it's very rare now to be seen in today's, transfer pricing environment. So uh, if the group or if the entity has any such kind of interest-free loan arrangement, they need to be, fixed and need to be evaluated at the earliest, right? So that's why it's very important now to analyze and examine any loan transaction, especially, an interest-free kind of an arrangement, and revise the pricing policy with an appropriate, analysis, uh, which depends upon certain approaches. But the underlying reason or the underlying thing is that there has to be a proper arm's length price analysis to be conducted. Only that will help that this transaction is at arm's length or not at arm's length. Yeah. Okay. Coming to the next element of our webinar is on the intangibles part, right? Uh, now, loans are more of towards the financial part. Intangibles, will obviously be a part of the asset base, right? So in case of the asset base, it's either tangible or intangible, or and now there has been also one more classification of financial assets kind of. But for simplicity's sake, we'll focus right now on tangible and intangible assets. So as per the OECD, the Organization for Economic Cooperation and Development, the basic definition what they have given is that intangible assets is something not a physical or a financial asset, and which is capable of owned being controlled for commercial activities. So this is just the main definition which has been given by the OECD. Uh, Generally in transfer pricing, there are two kinds of intangibles: marketing and trade. Marketing is including trademarks, trade names, etc. And trade intangibles are generally patents, copyrights, know-how, etc. So these are generally the common examples of two types of transfer pricing intangibles. Now, why this issue is now important, right? The most important here is, or the challenge, or I would say, is that when there are entities involved, in a group. So one entity, would be the owner or controlling of the intangible. One would be, contributing. One would be using the intangible, right? So it's very, very important to determine which entities or which entity within a group, are entitled to a share in, the returns. By share of returns for their intangible assets, we mean either they need to earn, an appropriate royalty, or they need to be paid an appropriate royalty, or they need to be paid, a trademark fee or a brand fee or a license fee, etc. Because one entity would obviously, be entitled to certain returns, right? And one would be entitled, had to be make certain payments. So it's very important to first of all, understand what exactly is the intangible involved. That's the first component. Then, uh, who is making what contribution, and then on the basis of that contribution, what returns need to be given to that particular entity in the group, right? So that's the most important point or an issue in intangibles. The other significant issues which we have seen based on our experience is that in terms of intangibles, it's very hard to get the most appropriate comparability or comparables. It requires a lot of deep down into the facts and a lot of greater fine thread bed of the analysis to find out proper comparable agreements or analysis or companies, etc., depending upon the nature of the intangible transaction. But uh, most of the times, the facts and the terms are quite different. So it's very, very important to understand that what kind of terms and elements are involved. And that's why it becomes that the lack of ability of appropriate comparability are one of the key challenges to be find out. And then again, as I mentioned, ownership of the intangibles by different, related parties within the group as to which entity, is owning and etc. Uh, the the DEMPE analysis or the DEMPE analysis helps to resolve some of these points, right? Uh, but DEMPE analysis needs to be conducted in conjunction with the functional analysis and then the benchmarking. So that is something why these are all three, very critical analysis for any kind of intangible transaction. Uh, Another difficulty what we have seen is that, isolating the impact of any, particular intangible because uh, taking for example, a pharmaceutical company. In that space there is R&D, there is a lot of patents, there are a lot of copyrights, etc. So which entity, on in the group are having, technical expertise towards the intangibles, towards the patents, towards the R&D, and what kind of returns they are to be, attributed is something very important from a transfer pricing point of view. So it is easier said and done to identify, proper analysis and to isolate the impact of any particular intangible. So if there are multiple intangible assets, involved, trademarks, brands, copyrights, patents in such kind of companies or, groups, it's very, very critical to analyze each and every intangible to a greater extent, right? And then I would say maybe this is the fourth one, but it's also very, very important because it's related to the DEMPE functions that which we'll be just discussing in the next slide, that how, first of all, to how to map the DEMPE and which entity within the group or the related parties, if there are 10, 20, whatever, uh, doing the DEMPE for each entity takes a lot of considerable time and efforts. And there has to be absolutely, clear cut understanding, delineation and demarcation of the DEMPE functions for each related party so as to determine the correct uh, remuneration policy or the pricing policy or the return for that DEMPE function. So that's why if you see for other kind of transactions like sale purchases or services, the DEMPE is not applicable. It's only applicable in the context of intangibles. And that's why the intangible analysis becomes much more complex and much more critical for any business group or business transaction, right? Now coming to what is DEMPE, right? So basically, it is compromising of these five points, right? The alphabets D, E, M, P, E represent a specific and a standalone function. So what is DEMPE? It's an analysis to be concluded in conjunction with to support the FAR, the functions, assets and risk analysis, to determine the appropriate allocation of returns derived by the group members and application of proper returns, income and costs to each entity related to each intangible of the group, right? So to put it very simply, so because this is more of a technical definition, to put it simply, if there are 10 entities out of which five entities are contributing towards the intangible value of DEMPE and the other five are the entities who are using or enjoying the intangible, we have to determine as to which entity is doing what function under the DEMPE and what return needs to be given to them. Because for uh, income or revenue for one entity would obviously be the expense for the other entity. So that is something to be understand by the way of a DEMPE and to see as to how it is to be appropriately remunerated, right? Now, uh, coming to DEMPE, what exactly DEMPE is. So primarily D stands for development, E for enhancement, M for maintenance, P for protection, and the last E is exploitation, right? So uh, each of these functions are critical and depends upon the nature of the intangible. but also depends as to what extent, on a scale of 100, right? If any related party is there, what kind of functions, it is performing in DEMPE. It could be that out of 100, the entity is doing all 100. That is, it is doing, if I give a weightage of 20, 20, 20 to all five, so maybe it is possible that each one entity is doing all five. So it is entitled to 100% of the returns, right? But it's not always the case. Till the time the proper DEMPE is done, we cannot, say that this entity is entitled to a high return or, a specific number. So that's why all these, are very important for an intangible. So to begin with, D stands for the development, and that's, I would say, giving the first, the birth to the intangible assets. That is creation and conception or conceptualization of the intangible asset. Generally, it entails activities like research and development, testing, uh, strategy building, planning, etc. So that gives to the origin of the intangible. So it will involve heavy technical infrastructure cost involved towards the creation of that intangible. So as the name suggests, it's related to the development of the intangible. Uh, Now comes the E, that is enhancement. So this is again something which is enhancing the value of the intangible. So again this becomes important. Again, as I mentioned, all of them are important, but enhancement leads to enhancement of the value or the utility of the intangible. Right. So it will generally involve an entity who is performing constant improvements or upgrades or amendments or modifications or any other value additions to the developed intangible. So it is enhancing the value of the intangible by 10 folds, 10, 20, 50, 100, whatever. So this is something, uh, it could be related to any intangible. If even if we take, for example, of a software, constant improvements and upgradations to the software programs by removal of any bug programs or making new updates, etc. That enhances the value of the software product as such. So that's why enhancement becomes the second, function in which the intangible has to be analyzed and which entity is performing that. Now, M stands for maintenance, right? So on a value chain, right? Maintenance is something, it could be that it is not a high-end technical function, right? Because this is towards more of ensuring that the longevity or the durability of the asset is there. So generally, it will be involving regular monitoring, regular feedback, upkeeps, etc. But that doesn't mean that this is not important. This is also an equally important, from a group value chain perspective, because it could be, the ultimate parent is doing the development, uh, the middle level entities are doing the enhancement. Maybe a little lower entities in the value chain would be involved in the maintenance, right? So, but if it's related to an intangible, we will still have to see that whether what entity is doing the maintenance, because at the end of the day, it's like, maintaining the life of the intangible, right? If there is no maintenance of the intangible, it can collapse. It can, the life of the intangible asset can, come to an end. So to keep us a long life in simple terms, the maintenance function is important. So this kind of entity would be entitled to a certain return, but that depends as to what extent of maintenance it is doing. Because, and this is something only after doing the DEMPE and the function analysis we can see that whether the particular entity is only doing maintenance or it is doing a combination of enhancement and maintenance. Because sometimes we have seen that an entity is going above the value chain and doing enhancement also. So then obviously its return to the intangible becomes higher, right? If and as compared to an entity who is just doing maintenance. So it could be possible, based on the DEMPE and the FAR analysis, it can be that one entity is doing a combination of functions, but it all depends on the facts of the transaction. Now coming to the fourth element of the DEMPE is the protection. So protection here, generally again, it depends upon, whether it's which industry, what kind of intangible is there. Uh, in our experience, what we have seen is that it could be possible that the ultimate parent entity or the entity who has developed the intangible, generally it would be